Why your savings account is losing you money. What if your money is sitting safely in the bank, but you're still losing money every single year? Millions of Americans keep their emergency savings in a traditional savings account without realizing that the interest they're earning may be extremely low. And the difference between a regular savings account and a high-yield savings account can become hundreds of dollars over time. Here's how it works. Let's say you have $10,000 sitting in a traditional savings account. The national average savings rate is only around 0.38% APY. That means your $10,000 could earn only about $38 in 1 year before taxes. But some high-yield savings accounts are currently offering rates around 4% or more, depending on the account and its terms. At 4%, that same $10,000 could earn roughly $400 in a year. That's a difference of more than $350 without taking additional investment risk just to earn that interest. Current U.S. savings rates vary widely, so it's worth comparing accounts rather than assuming your bank is giving you a competitive rate. The biggest mistake isn't having savings. It's putting your savings somewhere that barely pays you anything. Many people choose a bank because they've used it for years. Their paycheck goes there. Their debit card is connected to it. Their bills are automated. And because everything is convenient, they never check the interest rate. But your money doesn't care how long you've been with your bank. If another FDIC-insured bank offers a significantly higher APY with reasonable terms, your cash could potentially earn more while remaining accessible. A high-yield savings account is still a savings account. You're not buying stocks. You're not betting on cryptocurrency. You're simply putting eligible savings into an account that pays a higher interest rate. For example, imagine you build an emergency fund of $20,000. At 0.38%, that's only about $76 of interest in a year. At 4%, it would be around $800 before taxes. That's a potential difference of more than $700. Of course, rates can change, promotional rates can have conditions, and not every account is right for every person. That's why you should check the APY, fees, minimum balances, withdrawal rules, and whether the institution has appropriate FDIC or NCUA insurance. The real lesson isn't just about finding a higher interest rate, it's about paying attention to your money. Americans are dealing with affordability pressures, and many consumers are becoming more cautious about spending and financial security. That means every dollar matters. If you're working hard to save $500 a month, don't ignore what happens to that money after you save it. Your financial system should work for you in the background. Step 1. Check the APY on your current savings account. Don't guess. Open your banking app and look. Step 2. Compare it with competitive high-yield savings accounts. Look beyond the headline rate and check fees, requirements, insurance, and access. Step 3. Automate your savings. Even if you start with just $25 or $50 every week, automation can make saving easier because you don't have to remember to do it every time. Here's the important part. You don't need to become a millionaire to start making smarter money decisions. You don't need to trade stocks every day, and you don't need to take huge risks. Sometimes, the smartest financial move is simply making sure the money you've already saved is working efficiently. So check your savings account today. because the difference between earning almost nothing and earning a competitive rate could add up to hundreds of dollars over time. And if you want more simple money strategies for Americans, subscribe, because your money should be working as hard as you are. This video is for educational purposes only and is not financial advice. Always research financial products and consider your individual circumstances before making financial decisions.